You know that sad feeling when you blow up a Forex account within the first 1 week of actually starting? Like back in 2021 when I started Forex at first, after taking some lesson and then getting started with my own personal real funds to actually trade Forex, and I literally blew up my first account, and it was really a sad moment. Because why? That was the only savings that I had that I wanted to use to start a Forex career, and then all of a sudden I blew up the whole account and lost everything. And I know you don't want this to happen to you as well. So like, even you yourself, I know some people watching this video right now are blew up to 2 to 3 different accounts, but in my own case I blew up only just one single account, and it was really a huge account, and the loss, trust me, I know that it was all my fault. But then as a beginner at first, I thought it was the market fault. I was blaming the market, blaming my mentor and all of that. But along the line I came to realize that the market is not actually at fault, because the market doesn't hate you, the market doesn't love you. What the market actually does is that it responds to whatever thing that you give to him, and that's simply what the market does. So instead of just sitting back and blaming the market or giving up on my Forex career, I went on to do a lot of research, and I read a lot of books about Forex trading, and I was able to come up with 5 key reasons why most new beginner traders often blow up our Forex account or unable to build up a successful Forex career. And those are the things I'm going to share with you in this video. So I've chatted with a lot of like real-time successful traders, both in the past and now, and I also gotten a lot of ideas from their books and the rest. So coming to see, I realized that to get into the league of 1% successful Forex traders doesn't actually require you to start an account of $1 million or raise the whole funds that you have to actually start. It's simply having these 5 key rules whenever you are trading, and these are the ones that will help you hit that success rule and then be among those 1% successful Forex traders. So if your main aim is to be among that successful 1% Forex traders, then I advise you watch this video to the very end, because in this video I'm going to break down these 5 simple tips for you, and also tell you how you can abide them, how you can play along them whenever you are trading, to make sure that you are always at the safe side. So that already said, let's get straight into today's video. So one of the main reasons and the most important thing that I think make me actually lose was because I didn't have a clear trading strategy before venturing into Forex. So like when we all got started in Forex, all we know about Forex was that you buy when the price is down, then you sell when the price is at the top. Right? Simple, right? Well, Forex is not really that simple. The price can be at the down, whilst people will also sell at the same time. This is because a strategy is what that determines when you enter the market. So when it comes to Forex trading, avoid all those telling you that Forex is just buy and sell market. Forex is not just buy and sell market. It has a lot of things way beyond buy and sell, because without having a clear strategy, you wouldn't know where to buy or sell. You wouldn't know where to sell or buy, because everything will just look random to your eyes, and then you start trading randomly and celebrating random wins. Well, here's the big issue: for you to make a consistent profit in Forex trading, because a Forex trader who makes money, who is among the top 1% successful trader, is someone who makes consistent profits. Like out of 10 trade, that person win a minimum of 7 to 8 out of every 10 trade he or she takes, and that's what makes you a successful Forex trader. A successful Forex trader doesn't mean you won't lose any trade. You will lose 1 or 2, but your win ratio should always be higher than your loss ratio. That's the main key thing here when it comes to Forex trading. So what makes up a good Forex trading strategy? Well, a good Forex trading strategy is simply a strategy that has a clear point where you enter the market, and a clear point where you get out of the market, and also have a clear point where you keep your stop loss, to make sure that in case it doesn't go your way, because no matter how good you are, you surely analyze a market that might not go your way, because you don't control the market. No one controls the market. Only the pairs you are trading have control over the market. So you might do your 100% accurate analysis, and it may still not go your way. This is why you also need a stop loss to always guide any trade you take. So before you venture into Forex trading or learning any strategy, make sure that that strategy have clear entry points, clear points where you get out of the trade, and clear points whereby you know that you are not going to exhaust your fund even if the trade go against you. So in case you don't have any trading strategy yet, one of the most easy to understand trading strategy is simply price action. And when it comes to price action, all you need is simply understand the idea of support and resistance, and then mix it up with other stuff. And in this way, you are literally trading without even having any sort of indicator or something. So I will link some video down in the description that you need to check to learn more about Forex trading, learn how you can build up a strategy, plus my simple support and resistance ideal that you can use to start your Forex trading strategy build up system. So that's simply it all about the first point, is simply have a clear trading strategy. So hello guys, the second reason why I literally burned that account, and why you too may burn a Forex account, is simply because you lack a Forex trading plan. So after getting your trading strategy without a clear plan, trust me, you're still going to violate some trading rules that will also see you get your account. But trust me, every expert trader out there have a trading plan they follow. Like if you're in my Telegram channel where I drop signal, you will notice that I don't overtrade. Like there's a profit target that when I hit that profit target with any, like there's a pip target that once I hit that number of pips a day, I don't drop signals again. The moment I stop dropping signals for you on Telegram, know that I'm also no longer trading again. Those are simply the rules I put to make sure that I'm in a consistent profit run. Because most people, when they come into Forex trading, number one, they don't have any clear plan. That when we come to talking of Forex plan, it's simply referring to what and what do you look at before you enter the trade, and what do you want to get out of the trade and then close for the day. This is one thing that you need to know and understand as a Forex trader. So for example, I always have this idea that for example, if I'm trading with a big account, I have this target that I'm just going to make, let me say, $100, $200 a day. So once I make that between $200, $100 and $200, I'm close for the day. No matter how many clear chances I see to also grab more profit, I don't attempt it again. Why am I doing this? I'm not just doing this because I'm afraid of the market. This is not fear. This is simply a way to control my greed level. Because if you're unable to control your greed level, trust me, the more you keep trading, the more you keep gaining profit, the more the greed level will increase. And all of a sudden, this will land you to the main thing that lead a lot of people to lose their Forex account, is simply increasing their lot size. Because once you see that you've amassed a lot of profit in one day, trust me, your mind won't be at ease again. It will want you to keep trying, to keep going. And when you keep going in this sort of way, you are actually going to lose every single thing you just profited, because your greed level will lead you to increasing your lot size. So for example, if I want to start trading a big account, assuming my account is up to, let me say, $1,000, $2,000, $10,000, what I literally do is that I use one lot size of 0.5. because I always aim for long pips, so I don't do short trading. I go for long distance trading. So in this way, I get to make a lot of profit whilst risking as little as much as possible. This is not fear. This is simply called risk management, and this is what you need to understand as well. So you also need to give yourself this plan target and then follow that plan consistently. And another thing that you need to include in your plan is that which currency pair are you going to focus on trading. This is really important because your strategy might not work with every currency pair. Trust me, like the strategy I personally used to trade, I can't call it support and resistance, but it's purely price action. But then it doesn't work in Euro USD. Anytime I use it on Euro USD, it doesn't go. Anytime I use it on Swiss francs and then Australian dollar, it doesn't go on well. So what did I do in this sort of place? I avoid trading those ones. No matter how I see chances that rhyme with my formula with those particular markets, I don't go there at all. I simply skip that day. Like for example, on Tuesday, I dropped a trading signal. On Wednesday, I skipped because the pairs I traded, I did not see any clear signal, so I had to skip. That is abiding to my trading rules. Then on Thursday, which is the day I'm recording this video, but you'll be watching this video on Friday. If you watch it the exact day I uploaded it. So on Thursday, which is the day I saw clear signal, I dropped it instantly, and this signal traded over, it was over 100 pips actually. I think, yeah, over 100 pips. Why? This is because I know what I'm trading, I know the pairs I'm trading, and I have a clear plan when I'm trading those, and I have a clear strategy that helps me know exactly what to do whenever I see those pairs. This is one thing you need to understand as well. So one thing I want you to do right now is simply go and search on how to build a Forex trading plan and build a clear plan for yourself. In case you need a video on how you can build a clear plan, well, I have a video on it as well. I'll be linking that in this video description. You can see it displaying at the top right now. You can go check it out as well. So that's simply it about the point number 2. Simply have a clear trading plan. The point number 3, why you might not make any profit or lose all your profit in Forex trading, simply when you are trading with emotions. Like at times when you place trade, your mind will be shaky. Like you won't understand your body that moment. Immediately hit on place trade. Why is this happening to you? This is because you are trading with emotions. Like I remember back in 2021, I don't just want to laugh about the scenario whereby immediately I place a trade, all my full focus, all my full attention will be on my phone. Like I won't leave the phone. I can't leave the phone for anything. Every single minute I come and look at the trade, and then my heart starts beating. And then once I see that I'm getting into a minor loss, I simply quit the trade. And then after some few minutes, the trade comes back into my possession again. Then I get mad at myself, and then I would enter the trade again, and I still lose that again. This is because I was trading with emotions. If you truly want to make profit in Forex trading, I would advise you get rid of emotions. Like right now, I can place a trade in the morning, and like I'll just work out. I'll just remove my mind that I don't have any trade going on. Like I just get to format myself from it so that it don't get to affect my emotions. Like I simply since I trade GBP JPY the most, I always enter during the Asia section. The reason why I use the Asia session is that during the Asia session, the JPY, which is the Japanese yen, is really powerful during that session. So I get to use that session to do analytics and then place my limit order and then walk away. I know you're probably wondering, why will I place a trade and then just walk away? The reason why I place trade and walk away is because I don't want my emotions to affect the next decision I'm going to take in the market. Because if you are looking at the chart and you see that you are running at loss, what will come to your mind? You will just be like, I'm already at loss, let me get out of the market and then replace another trade. Well, that's the thing I'm trying to avoid. So once I place the trade, I simply walk away and then wait till 8 a.m. or 9 a.m. in Ghana time, which is during that period, pounds is coming back to regaining power. Yeah, that's simple. I get to I've traded these two currency pair for quite a long time, so I know when they are gaining power against each other. So I always like trading in favor of pounds for a lot of reasons. So during the Asia session, I do my analytics, place my limit order, walk away. Then during 8 a.m. to 9 p.m., pounds is trying to regain power now. I just then I go and look at what is happening in the market and then I just walk away again. That's simply so, because I've already set my take profit and stop loss. So I've told the market that, hey market, get me out of the trade once you hit my take profit. Get me out once you hit my stop loss. I don't want to exhaust my account. So I simply set everything down so I don't have to worry again, because the market is left for him to do his decision, because it can't be manipulated. Nothing can go wrong with the market because I've already set all my data in it. So that's simply one thing you need to also practice as well. Learn to place trade and then walk away from there so that your emotions don't affect you. Because when anything you do with emotions, trust me, you can never do it right. Once emotion is attached to whatever thing you are doing, you have 99.9% chance of always doing it wrong, because you will be trying to be in favor, meanwhile hurting yourself indirectly. So if you are trading forex and you want to be among those profitable forex traders, get rid of emotions. This is not a love story. This is business. This is risk taking. You need to accept the fact that you are taking a risk as a forex trader. The fourth point why you might be losing trade on a consistent basis is simply because you lack patience. So what does patience have to do with trading? So when it comes to trading, trust me, no matter how accurate your analytics is, one thing that will always save you from loss is simply patience. Because, like, for example, when you analyze a market, there are some markets where when you analyze it, there won't be chance for you to enter the market immediately. But then some people make this mistake that once they see a signal or once they see an entry point based on their strategy, they rush into the market immediately. Well, that is one wrong thing I would advise you shouldn't try. As much as it looks good, like entry into the trade immediately you cite your entry point, as much as it looks good, it's also very bad, because when you enter at the wrong time, you're actually going to get caught up. And then, because at times, for example, if the market is going on an uptrend, it might get to a point whereby it will have to retest the particular spot whereby it's actually moving from. So in case you go and meet that market at that uptrend level and then you place your buy market immediately and then it reverses back to come and test its usual zone again, you are already caught out, because your stop loss cannot be way below that zone in most of the cases. So when it comes to trading forex, patience is very important, because with patience, trust me, you can be able to build a very tiny account to something that you wouldn't imagine. And that's the journey we are right now on our $10 to $1,000 challenge. We are trying to build it as slow as possible to make sure that we are not running into loss, but actually gaining and accumulating tiny profit to actually get us there. So we traded for just 2 days, and our $10 we started with is now around $21 to $23, depending on. Some people actually got late entry in some of my signals, so they were able to hit more profit. Some they entered the market and then left their phones, so they came very late. So when I asked them to get out of the market, they weren't there, so they were able to accumulate more profit also. So in general, our $10 is now at $23 on a normal basis, because that's where my account balance is. So that's simply, when it comes to forex, you need to learn the habit of being patient. Even when the trade is going against you, just be patient, let it do its work, because you've set your stop loss and take profit. So why worry yourself? Just learn the act of being patient and then build everything gradually, so that you don't go and lose your funds because of the haste to make more profit or the fear of losing out on clear entry points. At times, let the clear entry points actually play out. You realize that they are the worst positions to actually enter the trade. Like, personally, everything I'm sharing here with you, I think I've personally experienced before. Like, I blew up an account that really hit me so hard, and for me to be able to recover from this, I had to go on a very long break, learn more, and then come back again and re-strategize, and that's what I changed my life till now, is because I was able to re-strategize and then use the right approach to actually follow the system. So that's simply about the point number 4, is simply having patience in whatever thing you're doing that has to do with forex trading. Oh yes, we are in the final place, which is actually the master of all losing trades. Yes, you heard me right. This is the master of all losing trade. Why? Because it's what we call the get rich quick scheme. Why is the get rich quick scheme the main major why a lot of people lose? Why is the get rich quick scheme the main reason why a lot of people lose trade? Because a lot of people get started into forex trading with the aim that they just want to make profit and not lose. Like there was a time whereby someone actually chatted me up, like a brother to a friend actually contacted me that he wanted to learn about forex trading. And I was like, okay, if you truly want to learn about forex trading, first of all, you need to. So I was chatting with the person, but then along the line, I noticed that the person's main aim was actually just profit. He wasn't ready to follow the process of forex trading, but he just want to get started and start hitting the profit immediately. Trust me, forex is never a get rich quick scheme. No matter how much you are trading, forex is never a get rich quick scheme. When it comes to forex, there are two things that determine your profit. One, how good are you? How experienced are you in the industry to grab longer opportunities? Two, how much do you have that you want to risk for higher profit? Because the more you risk, the more profit you gain. For example, you can't go and use a one lot size on a $10 account. A single pip movement will get you out of the market. You can't use a one lot size for a $100 account. I won't advise you do that because it's never safe. But then, if you're having an account of $1,000, $2,000, $3,000, sure, you can use one lot size, provided that you know your way around the market. But then, when it comes over to trading, a lot of people just want to start with their $10, $100, and then all of a sudden want to use a huge lot size because they know that the higher your lot size, the higher your risk and the more profit you make. And this one big mistake I will always advise you that you stay away from. Forex is never a get rich quick scheme. This one thing that make people see forex as scam, because a lot of YouTubers here, a lot of content creators, a lot of forex influencers out there will tell you that if you want to be a billionaire, start forex trading. If you want to make hundreds of thousands of dollars, get started with forex trading. I've seen so many ads from a lot of people. I don't just want to call names, but trust me, forex is never a get rich quick scheme. You have to pass through the process gradually for you to get there, and this is why you need to learn every single thing you need to know about forex trading before you start trading. Because if you think forex is a get rich quick scheme, trust me, you will sell your laptop one day.